Hello, it's Richard Bowser here from Property Investor News, and today I'm up at the West Bromwich Albion Football Club at the Social Housing Conference. So I'm here with Alicia Barlow, who was featured in the magazine last August, and talking about her portfolio up in the Northwest. So good morning, Alicia.
Morning, Richard. You okay?
I'm absolutely fine.
Great.
So just tell us a little bit about what you've been doing since we published that article on your progress about 9 months ago now.
Yeah, I mean, it's been like on steroids. I'll start from September onwards because there's been something every single month.
Yeah.
So September we disposed of a pub, made a decent profit. So we actually purchased that originally with the plan to make it to HMO. It all went south. Builder let me down, project manager let me down. So we decided, given how hot the market was, and there were people out there with the cash to spend and wanted to get into these investments, we were going to dispose of it, which we did. So we made a healthy profit on that. So that's the first disposal we've ever made, properly in the portfolio, because we were hoping to hold. But sadly, that didn't happen. So we've moved back into the buy-to-let. So we kind of thought we were going a little bit off-piste and trying to be a little bit more risque than we usually are, and it didn't work out. So I'm back to doing buy-to-lets, which has been phenomenal, even in the hot market. Yeah.
Okay, so you effectively flicked on that pub. Were you going to convert it? Forgive me.
We were. So the plan was to convert that to a HMO. We had the planning, we bought with the planning in place, and it was just the costs were rising, so our margins were squeezing to the point where it made it too high risk to do. And I wasn't comfortable doing it because it was our first project. And effectively, the project manager that was helping us do it kind of let us down. So we decided it was best to part ways with the asset and move on to something that we're a little bit more comfortable with.
So that business model you weren't comfortable with, obviously, as we all know, during that COVID period. We hope what was a COVID period, but during that sort of a year and a half, 2 years, material costs, build costs, labour costs escalated quite dramatically, and of course now we've got roaring inflation. So that business model of converting and keeping, you decided to sell. So. The traditional model of buy-to-let, which obviously by the sounds of it very comfortable with, and so at the same time as we're hearing, acquiring property in the current market is not as easy as it was 2.5, 3 years ago.
It's not as easy, but it's not impossible, and I think it's about being creative about the route to market and looking where your supply is coming from and just working with people. So the majority of the things that have come to me that work are through sources, and it's having those relationships which I've built over a number of years, which has helped me do that. Now, some of the deals we're doing, and I hate this term, which is all money out nonsense, but they have been. 2 of the deals that we've completed on have been just that, and they've been tenanted properties with very, very minimal work to do, and it's just jumping on the bandwagon of, well, the prices are increasing in the area. And in one case, we made double the money that we purchased for, which is amazing. And in this market, I thought was impossible to do, and it's not. So, yeah, interesting stuff. And there's more to come.
Excellent.